Good afternoon. Hello, please welcome. Everybody get to their seats very quickly. Thank you. My name is Renee Friedman. I'm a managing editor for EMEA, Europe, Middle East and Africa, at the Economist Group, the Economist Intelligence Unit. And today we're going to have, I think, an amazing panel discussing the digital transformation of banking systems. As we're all aware, the world has now become digital. Digitization is taking place across the globe. We see this spreading throughout Europe, slowly into the US. It's gone full steam ahead within Asia, and it's even moving into Africa and Latin America. But here today, we're going to talk about what's happening within Ukraine. So, to start off with, we have 5 very different speakers here today, and a few of them are going to give very brief presentations to start off with about who they are and what they're doing and their views. And then we will be moving on to questions. And after those questions, we will then allow the questions from the audience. So if we could please start off with, whoops, this is coming off a little bit, Mr. Sergei Budkin. I believe we should be able to get the slides up from the back. If you could please get those, and we'll start with some of Sergei's views on what's happening within the banking system within Ukraine.
Добрый день. Я надеюсь, меня хорошо слышно.
Good afternoon, dear ladies and gentlemen. I do hope you hear me very well. I would like to start our panel. Thank you very much, Renee, for introduction. I'll try to see whether we can really put on the slides. The point is, when you are the first one, when you start the panel, usually the technology fails. I kindly ask you to switch on my presentation. Okay, probably I would like to start without it, and then I see. My name is Sergei Budkin. I'm the founding and managing partner of InPoint, a company. I'm also a practicing banker. I have one of the projects in the banking where I am one of the shareholders. And I do know something about transformation of the banking system in Ukraine, because our company, I mean FinPoint, was one of the companies that significantly contributed to the digital transformation of banking system in 2005, 2007, and 2008, when our large banking group came to Ukraine. Also, we worked on the transformation of the banking system when the same big banking groups left Ukraine, and they were trying to understand what they had to do with their banks located in our country. And the current system, the current situation in the banking system, in particular its structure, is actually the product of that period, and we contributed to it as one of the investment banks. To launch our panel, I would like to give you a couple of historic facts. I mean, what happened in 2005. In 2005, we sold Aval, Raiffeisenbank, Index Bank to Crédit Agricole Bank. The most important thing was to inform the customers about the branches of the bank. For instance, Privatbank had about more than 3,000 branches. For example, Ukrsimbank had about 30 branches opened every month. At that time, it was evident to everybody what we should do in terms of banking. So the banking system was all about infrastructure. That infrastructure was supposed to be very conventional and very conservative. And one of my favorite examples is, unfortunately, I lost the photo, but I will describe it, and you understand why I'm talking about it. The central street of Kolomea. Kolomea is one of the provincial towns in Ivano-Frankivsk region, and in 2007, the central street looked like Wall Street, because there were BNP branch, Erste, Raiffeisen, Crédit Agricole banks, So there were a number of bank branches. So all the banks had their branches in one street. And it looked very strange from the viewpoint of the location. You should understand that it was a small town. Another point was the universal bank. Again, we wanted to offer a lot in one window, starting from corporate business to loans and mortgages. Mortgages were something very important. There should be some property, and only in that case we can give you a mortgage. Later, there were a number of transformations. Certain niche models have been successful, like Monobank, like Pro-Credit Bank, that was specializing on SMEs. Probably it is not that present as some other banks, but if you trace their history, they survived through a number of crises, they were profitable, and it was due to their specialization on SMEs. So it is one of the most stable banks in our banking system. It could be bigger, it could be smaller, but anyway, it didn't show some negative returns in comparison with other banks. Another point is mobile banking. Here I have 4 different banks: Australian bank, Russian, Ukrainian, and one more bank. Sorry, we have 4 different accounts which you can manage without being present in the country. In 2009 or 2008, it was impossible. So identification of client, we go away from the mortgage. We try to evaluate the capacity of the client to pay for his or her loan and not on the property that we could take as a mortgage. What is interesting, in 2015, we were trying to understand for ourselves how digitalization influences the bank assessment and bank evaluation. So we talk about Privatbank. We were trying to split it into several segments, and we were trying to assess how much it cost as far back as 2015. You see a fintech, ATM network, and you see that the results are different in comparison with one universal bank, even without assessing its corporate portfolio. And probably I would stop talking about history. Actually, we all are going forward. Digitalization is on. We all are going on the way of talking to the banks through different distant channels. And probably I would like to give the floor to the practicing bankers and representatives of a financial and technical sector.
Great, thank you very much. On that, we will now have a presentation, just discussed very briefly, by Mr. Sergei Chernenko, the situation with the FUIB, First Ukrainian International Bank. Bit of a background on that. You could please.
Okay, thank you. Добрый день всем.
Good afternoon, dear ladies and gentlemen. Once again, I am Sergei Chernenko. I'm chairman of the board of First Ukrainian International Bank. We also survived through all the crises, and we are proud of it. And we have become even stronger. We didn't ask for any loans. We did everything ourselves. And currently, we are probably one of the largest Ukrainian banks with private capital. But we should talk more about digital transformation that happened in our bank. We are quite experienced in this respect. Please put my presentation on. It was a long way for us. We have chosen a significant vendor. We worked with it a lot. We understood that probably it was not very good. We changed the system. We paid lots of money. So that was our way. We were trying to work with IT company. We thought they were very advanced, and they did something for us, good software. And again, nobody wanted to use that software, and we had to pay for it for sure. And again, we understood it was the wrong way. At that time, we understood that probably we should get more IT people, probably we should cooperate with them and work together. After some time, we understood that IT people did not understand what business wants from it, and the business didn't know how to talk to IT people. And finally, we came to the point that in order to become successful, we have to change DNA all over our bank. Digital knowledge should be part of the skills which is present everywhere in all fields of business. And when people start getting these competences, the company is speeding up in terms of its digital development. Please, I would like to have my presentation on. The second important conclusion we came to was about the point that IT is very expensive and very complicated. We talk about here you see the volume of investments for the recent 3 years. We started from 235 million a year, and now it is over $500 million. The point is that the experts are expensive, the software is expensive, infrastructure, servers, test environment, cybersecurity, all these things were really very expensive. Another important conclusion we came to is that digitalization does not start with technology. It starts with the understanding of the client, of the problematics of the client. Another important component is culture. What we should do to address the needs and ideas of the client, and what we should do in order to make business and IT compatible and to use such technologies as agility or Scrum. And finally, we talk about technologies which are important from the viewpoint of the accessibility and user-friendliness. An important aspect is that all the time we have to remember why we are doing it. We are doing it for the client, we are doing it for ourselves. Now lots of people are interested in technologies because it is fashionable, let's implement it. But we understood that actually we just spend lots of time, efforts and money on it, but you may not get the result you want. But when you understand why you are doing it for yourself and why you are doing it for your client, only in that case you are going to have success. And also it's necessary to extend the technology of the company on several layers. There is the so-called fundamental layer, where actually very little is changed. We talk about the unified customer base, etc. There is also the layer of business processes, which is changing much quicker. We provide the services to the client, which we have, and the innovation layer, where we can experiment and we can try something new, we can innovate. If it's successful, it's okay. If we failed, we should try something new. And an example to illustrate what I have just said, this year we have implemented on Viber, and it was probably for the first time in the world. Actually, 2 weeks ago, we presented the so-called Viber banking. We introduced lots of banking services into Viber public account. It's much easier, it's much more comfortable and convenient for the client. And when we were, if you have good technology, if you have good team, it can done everything quite quickly. It works both for natural persons and for SMEs. For instance, currency trading, which is again done in Viber. So this is briefly everything from me.
Right. Thank you very much. Very interesting points coming out there that we'll be discussing in a moment. Just to give speaking of IT, the guys in the back a moment to load the next presentation up, and my apologies for that it was a bit late in loading your presentation. If you could please put up the presentation of Mr. Budye Tumra. Just give that a moment to load up. I think we're up. Okay, please.
Good afternoon, everyone. Thanks a ton for having me. I'm going to switch to English, if that's all right. So I head up innovation for DBS Bank. And I'll run you through a little bit of our journey that we went through. So our sort of journey starts off in 2009. Okay, does this clicker work? Yep. So in 2009, if you were in Singapore and you asked anyone, what is DBS? They would say DBS is damn bloody slow. We had a very bad name in the market, and even from a customer satisfaction perspective, we would sit right at the bottom. So from a management perspective, we said, okay, we want this to change. And we said that we went on into an offsite and we had a big think, and we wanted to reinvent ourselves as a bank. And we set ourselves as a purpose, and the purpose for us would be making banking joyful. Now, there was a big gap being damn bloody slow to making banking joyful. So we started off our transformation. And our transformation was in different programs. So we started off in 2010 introducing Lean because we wanted to be faster. We also introduced new Asian service standards because we were an Asian bank. We wanted to offer Asian services. And things were coming along well. We started seeing improvements. But what happened is we realized that the world was changing, and the world was changing very fast. In 2014, when we had a look, we discovered that a lot of fintechs had entered the space, and they were providing propositions to nearly every service that we had, and they were doing a very good job. And where the fintechs were, of course, the smaller companies, we found all the large companies were jumping into it as well. So over here, you've got Amazon with all their services from a banking perspective. But closer to home, Alibaba. Now, both DBS and Alibaba, we transact over 100 billion. The difference, they took 11 months, we took 49 years. So that was the difference. The other example is you've got WeChat. WeChat, now in comparison, PayPal does 6 billion transactions a year. WeChat does 32 billion in 1 week. Now, these are all companies that are in right next to us, our neighbors. And then these are the competitors we know. Suddenly Grab. Grab is our version of Uber. They've just bought over Uber. And AirAsia is an airline. Both of them announced that they're starting banks. They said, we have customers, we know what they like, we are also going to get into financial services. So the game had changed completely. Our biggest customers had now become our competitors. So in 2014, we made a change, and we went from just a transformation to becoming a very focused digital transformation. And we have 3 pillars of our transformation. The first one is that, are you clicking? Oh, I'm clicking. We want to be digital to the core. And this meant that we wanted to be the D in Gandalf. And Gandalf is the Googles, the Amazon, the Netflix, the LinkedIns, and the Facebooks, and the Apples. So we basically reinvented our program to say those were our potential threats, those were our role models, that was what our aspiration would be. So we went heavy into cloud, microservices, APIs, etc. We looked at the mechanism and platforms that they were building, and we looked to emulate those. The second one was embedding ourselves in the customer's lives. So we went into a complete design thinking, and we introduced human-centric design. And it was all around the notion of, if we are going to introduce anything new, it has to be relevant, of course, to the customer. And our main proposition would be, for the future, is how invisible we would be, how intuitive and seamless and frictionless our products would be, that people would not know that they are banking. So our mantra was live more, bank less. And the last proposition was to re-augment ourselves into becoming a startup. So we have 26,000 staff, and our big push from a cultural perspective is to re-augment the bank into operating and being like a startup, having this mentality of aggression and ambition that a startup has, and working within constraints, being nimble, being fast. So those were the 3 pillars. And slowly, as time has progressed, we've moved on. And from DBS being damn bloody slow, we have recently picked up a couple of accolades. We picked up becoming the Digital Bank of Singapore with winning the world's best digital bank and the world's best SME bank. And we also recently picked up from Global Finance being the best bank in the world. So that's a little bit of our journey in regards to us going from damn bloody slow to becoming the Digital Bank of Singapore. Thank you.
Thank you very much. Okay, again, very interesting. As we see, I said everyone will be presenting now, but we will be getting to some very specific issues and questions, and particularly touching upon these points of transformation and what will be pushing transformation, and how, now that we've looked at the history, how that will be progressing. So for our last presentation, we'll be having Mr. Spivak. Let me just be certain that we do give it a moment, that if you could please get the presentation prepared. Give you a moment to do that. Technology, as much as we're trying to advance it, still has a bit of a glitch every once in a while.
Thanks, Rene, for the word. Добрый день всем. Благодарю организаторов за...
Hi everyone, it's a great pleasure for being here today, for being able to speak and for the opportunity that is given to the banking sector to deliver their speeches today. So we've been talking a lot today about the past, and we've had lots of flashbacks and spoken about the achievements in Ukraine, but we are a global group, and I would like to show you several trends that are taking place currently at the digital transformation in the world, so that we be able to kind of launch the discussion, because usually banking sector is heavily criticized now, so we're kind of losing, fintech is winning, and some other communities, market disruptors are winning, but we still have to keep in mind that the first decade of the 21st century, the banks spent searching for the capital in order to cope with three crises that happened in the past in Ukraine, and we now see that half of the banking system was spared, and in the world we've seen that over the 5 years more than 20,000 of branches were shut down over the recent years, and we didn't have a lot of fun, we didn't have a lot of investment done. So over that period of time, what has changed is the environment that we've been working in, and the digital shift has happened, and then quite considerable non-banking alternatives came to existence. And what's the most important is the expectation and choice of the client has shifted as well. The banks continued being with return of investment lower than cost of equity, and over the recent years only the average ROI in the banking sector was 8%, which is not that high. As you know, in Ukraine up until 2 years the return of equity was negative all through the banking system. It's only now that we can say that gradually the banking system is recovering, becoming profitable again. But still, what has been going on has led to the fact that now we have GAFA, now we have challenger banks or neobanks, and we've spoken today about the monobanks, so lots of examples of the kind in the world. And speaking about the data annually, the annual growth over the 2 years that we're talking about is more than 30%. That's the banking portfolio. They are competitors, and if GAFA is still not in the game, but when we talk about the challenger banks, they are getting developed faster. Now we're called legacy banks by some. So in order to live the myth that legacy banks do not invest into the innovation, let's check the statistics over the 10 years. 80% of the banks has got the most innovative investment strategy. And another interesting thing is that an average investment of the revenue, like a big leading bank or the following bank, is not big. It's around 3%. The question is not we don't have to make the mistakes and the growth that Sergei Chernik has been talking about in order to. So how much you can pull from the IT and the developments that you do, this is the choice that we make every day. And we have to say that up until now, the main barriers for us has been the legacy systems, the understanding of the path to follow, but the digital path to follow will not the consultant tell us what the path should be. Every institution chooses a path to follow, the path that is more relevant to the infrastructure and architecture and the culture of the organization that is choosing the path to follow. Briefly speaking, what we concentrate on our investment and interest is the improvement of the channels, omni-channels, opti-channels management, something that's been spoken a lot about now, and we need to figure out how to work with the data and how to make the data action, but not only set of data and the information about the client that we usually have. We have to work with the talented people, and we have to change the culture of organization to not be an alien body in a big body of legacy bank, trying to be an evangelist of new changes. So speaking about, hold on a second, speaking about the perception of the bank that the client currently has, we may say that more branches are not number one when we're talking about the bank selection. If we see that over the 3 years, the data that the world community has given us, we see that the proximity of the branch to you is no longer an important thing. Now, if you have a good applications, mobile application, it does substitute a lot of, does resolve a lot of issues that you face when you work with a bank. If you see that 33% of the clients would like to have their account open virtually and more than 50 would like to buy using digital systems and platforms. There are several pillars that tell us how the digitalization is evolving in the country. And Cisco runs this analytic every year. And we take a look at this. We see that Ukraine has made a big leap in that chart over the several years. 4 years ago, I showed the same statistics in Prague, the Czech Republic. At a technology conference, Ukraine wasn't even in the bottom top 30. Now Ukraine is in the middle, and Ukraine is one of the leading in terms of the leaps of the digitalization inside. So the pillars that we'll be talking about briefly, in short, are developed by harmonious within the country, and they let us be at least among the top 30. If these pillars fail to function, there is a precondition for the fintech community, and we see how unicorn companies have been developing over the 5-6 years. 6 years ago, we would have only 2 to 3 names. Now we have a lot. The names are numerous. You see them on the screen. And now another thing that's important to say is that banks cannot come down and slow down seeing the statistics that they currently have on their hands, because the most recent researches show that in Britain and in the UK the level of trust to your main bank is close to the trust of PayPal and Amazon. So big techs, GAFA and all other challengers banks are gradually capturing and invading the terrain that traditionally belongs to the legacy banks. So there's nothing else that we can do but simply to imagine digital and keep on moving.
To end. What is clear from all the presentations we've had thus far is that there has been a massive transformation in how people react to financial services, to banks. There's been a big, and what I'd really like to ask is, we've touched upon a bit of the push behind the growth, potentially in banking technology, and how this may be tied to, we've heard the GAFAs of this world, or the Gandalfs, so it's a new one. And really this ties into very much into changing consumer behavior and changing consumer demand. So I'd like to kick off a little bit discussing that and how you each feel that has forced the banking system to adapt, how it has forced the banks to adopt new operational models. You mentioned we've heard mention of the reduction in branches, more of it being online banking, less in-branch banking, perhaps the transformation of the branch itself as just a particular digital touch point for services. So I would very much appreciate if we could start off with a bit of a discussion perhaps on that. I'll throw that question on the changing consumer behavior and demand and how banks are adopting new operational models in response. Rajev, would you like to start off? Did you?
Sure.
Sorry.
So I guess from our side, we're very cognizant that no one wakes up in the morning saying, yay, today I'm going to the bank. Sometimes not even our employees who work in the bank. So from that perspective, before, where they didn't have a choice, rightly to what you said, now they have a choice. They don't need to go into the bank if they don't have to. And if your bank doesn't provide the service, they will find another bank that does. So from a customer perspective, there's been definite change. So a personal example, sitting in the house, often you would sit with your friends and say, I feel like having this dessert. And then you would talk for a little while about, oh, it would be so good to have it. Now that conversation goes, ooh, I feel like having it, to taking out your app, and within about 20 minutes, you have it. So that expectation is transferring to every walk of life. And banking is no less. So we have to adapt and we have to change. So from that side, the customer demand has escalated to a point where now even all the fintechs and all the other organizations are being able to provide that service. So there is no excuse. So from our perspective, it's very much trying to be as much ahead of the curve in anticipating that need and then satisfying it.
Would anyone like to comment on that in terms of the changes and how their own banks are adapting to it, for example?
Позвольте тоже несколько комментариев.
I also would like to mention a couple of words. I would talk more about Ukraine because we are a bit lagging behind from changes happening all over the world. But in Ukraine, we also feel these transformations and these changes. The very business model, banking business model, is changing. In the past, bank was on the top of the pyramid. It was the king who is dictating the conditions. Now the king becomes the client. The customer starts talking what he or she wants. And we have to adjust to it. And lots of aspects develop which are new for us. Banks didn't want to listen to their clients. Why fintech is always the winner? Because they listen to their customers. To illustrate the point, we had one of our customer journeys, and we were trying to see how the customers see our services. And we had a shocking news. The customer does not think about the bank. It is interested not in the transactions, but in services that the client wants to give to the other client. And we were just isolated from this understanding. The behavior of the customers is changing, and we, as customer-oriented banks, have to change our performance, our operations. And in Ukraine, there is the so-called dualism. On the one hand, we have more and more customers who are ready to have mobile banking, etc. And still, we have the clients who still live in cash-based economy. For them, it's important to operate with cash, and they use cash more rather than their mobile banking. So we might say that we are cash-oriented economy. It is still dominating, and it influences our operations. But the very business model of the bank is transforming. We lose the priority right in terms of communication with the client. The client chooses services from different banks, and sometimes the client does not even understand that this or that product belongs to a different bank.
Had Andrei speak yet. In this point, we've heard a lot of the discussion about fintechs. Well, you're coming from MasterCard, which is obviously a big payment aggregator, a big payment player within this. What are your views on this in terms of, because you're obviously having to respond to how you're working with the banks as well within this process? If you could, please.
Во-первых, хотел сказать
First of all, I would like to say that we have quite a good, smooth panel because everybody agrees on the point that the banks do not have any other choice but going to digital, becoming digitalized. Talking about fintech things, definitely MasterCard is working with the banks. They are our key clients, but we have to understand that our business definitely benefits from the fact that fintech companies exist, so we do not talk about risks, actually. What is happening in Ukraine? What are the recent changes that happened in Ukraine? Our national point is that people are ready to accept innovations offered by financial and technical companies as well as banks. And MasterCard has made a survey, and lots of people are ready to pay with their smartphones. And this year we have launched Apple Pay and Google Pay, and Ukraine is in top 5 European countries in terms of the number of transactions. So customers are ready for innovations as well as banks are ready for innovations. And 90% of bankers are willing to innovate. But what is interesting is that 60% of bankers, it means 2/3, have never been working with financial and technical companies. And the point is how to organize that marriage between the banks and the financial and technical companies. There are two models. One model is to build up competence within the bank, and the other point is to choose these fintechs as the service. And definitely it depends on the bank what kind of the model will be chosen. It will depend on the readiness of the bank. So whether the bank is going to build in-house capability center or whether the bank will engage fintechs into their operations, into their activities. And probably the last point from me, the banks will stay because they are playing a huge role within payment system. Banks probably are one of those few institutions who know what is what in the field of payment. And in future, it will be very important to understand that there is a person, a client behind the payment. The banks know this, unlike financial and technical companies.
I think if the translation is right, it's saying that you're saying that banks will be dominant and they will stay, because certainly towards Southeast Asia side with China, it's the complete opposite. With Alipay and WeChat, etc. Often from a bank's perspective, we woke up in the morning and we found 22 billion was just wiped off because payments had moved away from banks. So from our perspective, there is a general feel that banks have lost when it comes to payments, that the propositions that are being provided by some of the tech companies are actually, the experience is so seamless, and the merchants are gravitating towards jumping into those ecosystems that it's way more compelling than just a bank provider. So our view is, we have a slightly more fearful view in regards to where banks will be in the future.
Would you like to respond to that?
Ну, если говорить
Talking about the situation happening in Eastern and Southern Asia, yes, your situation might be totally different in comparison with that of Ukraine. You do have significant players who have taken lots of space in terms of payment. In Ukraine, we do not have such huge players. Big financial and technical companies are not still present in Ukraine. And the banking system is very quick in terms of innovations. And I do believe that probably the banks have a chance to win over financial and technical companies or establish cooperation with the financial and technical companies. I probably would like to add, and it's not always that the innovations become useful and interesting from the viewpoint of time. You were trying to see how the banking sector is developing in post-Soviet countries, in different post-Soviet countries. And we have observed very quick trend in terms of reducing functions in branches of the bank and in terms of digitalizing the services. And definitely lots of clients now use distant channels for sales, for our banking services. But understanding this, I also remember the point that the most technological banks, probably one of the most technological banks present in Ukraine, this is ING, and it is present beyond its home market, which is in the Netherlands. And this bank was trying to do something similar in Ukraine in 2005, 2007. It was trying to do it. The head of ING in Ukraine was Andrew Henderson, who is now one of the chief officers of ING Group in Amsterdam. So this is a person with huge competences. This is a person who is a pioneer. And in Australia, from ING Direct, he made the fourth or the fifth significant banks. In Ukraine, at that time, the innovations didn't become popular. And probably it is something general, but lots of things which is considered to be innovative now probably won't be popular right now, but will be popular in future. And the second point is that when transformation has been launched, it is going on very quickly. And we can invest a lot, as ING did in 2005, into new technologies, and they will not become popular. But at the same time, if these technologies are popular, we have won. If we did not guess the right technology or right innovation, it means we failed. A couple of things I would like to comment on. Definitely, the time is going on and the requirements to the banks are changing. But coming back about technologies, whether the new technologies will become popular or not, it seems to me that the majority of banks in Ukraine are on the stage that they have to choose operational model and their own digital way in order to achieve some basic parameters in order to become adaptable and agile. Currently, lots of banks just do not understand what the middle layer is, and they try to use the typical waterfall approach when you have been waiting for implementation of a number of projects for many years. And what we see from the global community is fast and duty. When you prepare a product, you try it and you see whether it works or it doesn't work. So this homework, this home task is something we have to do in the nearest few years, because the banks which are present in Ukraine have already done the job, and they invested lots of money in order to establish the platforms, the basic point which will serve as a fundamental platform for new functionals. Talking about discussion about fintechs, etc., I would like to give some statistics. All the banks invest about $60 billion a year into innovations. And I would probably specify not in innovations as such, but in IT. And if we have a look what sum of money goes to cooperation with fintech, it will be about 5%. So we do not take Unicore that has capitalization over 1 billion, and definitely they are higher than Barclays. But in their majority, the fintechs are not ready to have a structural approach to solving the problem. Yes, they are client-oriented, they understand how to do certain specific parts, but they do not understand how to enter the chain end-to-end, which the banks know. And we definitely try to evaluate the capacities of fintechs in Ukraine. And those fintechs which are ready to add this added value are really very few. And therefore, we try to use our internal resources, trying to build up our internal competences or trying to work in collaboration, again, building up our internal competence and fintech competences. And then, as a result, we shall have synergy. And the second point was about changing the logic and functionals of separate branches. At the beginning, we have to understand what will be our target operational, service and product-oriented model in order to understand how we can transform our branches. Definitely, the branches will be still popular for some period of time in Ukraine as well as all over the world. The point is, what kind of functionals will they have? The example with ING was very good, but as far back as 2008, they didn't have time to extend their network. It was the crisis period. But at the same time, they had very good model in terms of franchising model. When they had digital component, when there was face-to-face interactive point within the branch, and at the same time, there was very good measurement tool in terms of efficiency of these branches. So for me, this is the point. This is not the point where we can talk when we can be indecisive. If you are indecisive, you will be pushed out of the market. Monobank, for instance, for a couple of months, and we have plus a couple of million clients. And lots of banks several years ago were talking about new clients, millions of new clients. And here you see the example of Monobank when they met the expectations of the client. You wanted to have everything, and right now and here you get it. They provided what the client needs here and every day.
We're now discussing in terms of how the banks who in Ukraine still have customers' trust to some degree are going to be working with fintechs, which you were saying aren't as well developed within Ukraine as they may be in terms of competitor banks, neo-challenger banks, as in other countries. So in terms of banking, as part of their banking innovation strategies, what will they be doing in terms of creating new strategies in terms of innovation hubs, either internally? Are they looking at open and closed hubs? How are they developing a new digital ecosystem to work with the clients that they want to work with? How will they be building out to work with fintechs? How will they be building out to work in terms of, or doing it on their own, or remaining in terms of the types of platforms that they then want to offer their clients? Will they be going as, a marketplace approach? Will they be looking at creating niche propositions? What do you see happening? And we're going to the panel. Somebody like to comment upon that? Yes, Andrei, please.
Now, speaking about the destination, so when there's a cooperation between fintechs and the banks in Ukraine, I think there's going to be symbiosis in a way, because definitely as of now, it's hard for the banks, and despite all the efforts that the banks are putting to catch up and to be ahead of, still it's hard for them. Hard because the fintechs are offering quite targeted niche services, quite often do it better than the banks do. So I think that in a short-term perspective, a couple of years to go, 3 to 5 years, we will see quite good cooperation between fintech and the banks. Now there's not a bank that hasn't tried to cooperate with the fintech. Probably as of now, fintechs are not quite developed to work with the bank in this kind of symbiosis, but we see the example of Monobank. We see that you can match the client's needs with great precision. So in the short term, this is going to be a symbiosis when the bank will have a relationships established with the client, and the fintechs will be offering certain specialized services, like, for example, money transfer. We see that there's a cooperation between TransferWise with big banks. Big banks are open for the TransferWise, and TransferWise offer certain services. I think this is the type of model that will be functional in Ukraine. So the question had got to do with the organizational structure, how the innovation can happen in banks. Let me tell you about our experience. Frankly speaking, there are two conceptual approaches, or even three conceptual approaches. The basic one is when you set up a digital hub or an innovation office with different sets of functions, from basic ones when they simply generate ideas, all the way to the functions when gradually, step by step, legacy bank becomes a digital bank out of the hub. Or the second approach, when you from the very beginning set up a structure which has got innovation in every point of its organizational structure, not setting up an evangelism point that later gets spread and expanded. A year ago, we were developing the innovative change strategy, and we followed the digital hub path. I can tell that in our example it did work over a year. We now have 60 people within the hub working with full agile approach and with average performance time frame 2 to 3 weeks, which is a world benchmark. Why it's good or bad? Sometimes approaches may differ. The culture of legacy bank different. It's lagging behind as time goes by. It's very important that the hub implement new culture the right way into the entire institution. But still, we see from the data that on average 50% of the digital transformation in the world are not successful. Why? Because the management buyout doesn't always work, digital pass notion doesn't always work, and the understanding how to get to the objective, well, you do have that leadership moment retained because the chief digital officer concept is dying out, because as a rule, the banks that are successful in their innovation are the banks where CEO is the promoter of the changes, or there's a digital board that's in charge of the latter. But with regards of the successful versus non-successful implementation, there have been cases, and we're aware of them, when different banks in the post-Soviet countries would create hubs, but then they would realize that the model didn't work and they would build the structure from the inside. There was a private bank system. 2,000 IT people worked for the private bank. Yes, they kind of worked at an innovative environment, but still they were digital savior workers within an organization. And there are Russian examples when Tinkoff Bank now has more than 600 developers inside within the company. There's a Raiffeisen Group experience when within the system there is an agile organization system set up in which every business structure has got its own IT department, has got its own squads and tribes and everything producing results. So we've got to check the organizational maturity level that you're currently at. If, for example, you are not quite confident in the steps that there should be global, start with a hub. Start with a small hub housing 10 people, and gradually they will create several basic prototypes that will allow the management and everybody else to see that this, what they're doing, is functionable. Then the success in small gets expanded, because just like the head of McKinsey said, when we were coming up with the swiftest boat, fastest boat, we're thinking how to merge into a bigger ship. So that's so much important that the basic institution and a hub or an innovation office that is in charge of developing new cool stuff, kind of be tied together, because there's a core system, because two-speed IT thing that's still there. So the optimal merging, the optimal combination merges fintech ecosystem and some other counter-agents into one bigger system.
A little bit of what's happening from our side. So we've had huge success working with startups. We have a very conscious lens that a startup can be a competitor or a collaborator. So I'll give you an example. In India, we operated for over 10 years with only 14,000 customers. So this is complete in India, 10 years, only 14,000 customers. We decided that we would look at the market and approach it with us being like a fintech. So we released a proposition in the Indian market, which was a mobile-only bank, no branches, no paper. It used signature lists, so it used your thumbprint. And within 18 months, we went from 14,000 customers to 2 million customers. So it was a complete change. And we built that proposition on top of 3 fintechs, so 3 startups. One of them was a finance management system, one was a security soft token, and the other was an AI agent. And the AI agent allowed us to basically put the proposition forward, because in a traditional model, to service 1 million customers, you need 300 people. But we were able to use the startup's AI tech to service 1 million people with only 30 staff. So it was a complete paradigm shift. So we were able to penetrate the market. So this year itself, we've introduced about 194 startups into the bank. So now we do it at scale. But to your point, it works because we do have that ecosystem. Last year, we had about 12,000 startups, and they came with 65 billion in private equity. So they came with a lot of money. Now, most of them will fail. But even if 1% survives, that's 120 new people that you can work, partner with, or they can be your competitors. So the environment is very rich. One of the other important players is the regulator. Now, I'm not sure what role the regulator plays over there, but we have a very progressive regulator that is pushing. And they are pushing, which means they are pushing the banks as well. So again, from a matter of choice, it moves to no choice. The cash, even we have, cash is used a lot. The average ATM transactions globally is 5,000. In Singapore, it's 20,000. So people like cash because it gives them anonymity. And it's easy. We have a lot of ATMs, etc. So from that perspective, but cash is expensive. So the regulator has a very strong agenda for cashless, for digitization, for smart nation. And that is fostering this ecosystem. So from a bank perspective, we have a push and a pull. We know that they can give us success. At the same time, the regulator and the ecosystem is giving us those choices. So it's a slightly different paradigm.
Very quickly.
Очень короткие просто.
I would like to add up to what you just said. The regulator, Ruslan, for example, who is on the left of me, he's responsible for the entire IT at the Raiffeisen Bank Valley, and he's the head of the regulator now, the National Bank of Ukraine, the former shareholder of the Raiffeisen Bank Valley that has sold it to Raiffeisen. He has been responsible for the IT with the bank, and his ability to perceive, he's been responsible for the IT, credit card business, and so his ability to digest the necessary, the need for the innovation is very important, and there's a need to help from the regulator to exist on the market. So this is something that is very important. I would also like to continue and kind of argue with my colleague as how the bank should be transforming and if the digital hub is functioning or not. I can tell the digital hub is needed for the evolution of the bank and the heads of the bank, so the CEOs of banks see how things are well. So for good banks, well, I've checked, we've studied, I haven't seen any good examples. Why? Because it's very difficult to get married to different philosophy. One philosophy was of a traditional conservative risk-averse version, or thinking risk of the classic banker that the majority of bankers are, and how we've been brought up. This is how we've been brought up by the regulator, who tells us bank is the risk management on one hand, and on the other hand is the startup philosophy, fast, agile. You try, you fail, you try something else, you fail, you throw it away, and only then you start thinking about the risks, the level of control, and the process, if it's described well, if you have lots of guidelines and experience. So digital hub is an ability, this is an alien body within an organization that has got its own ideas, that does not understand the rest of the business. So the business tells you, so we need to sell this according to the plan, and you're here, you don't know what you're selling. So only when it becomes part of the philosophy of the company, the understanding of the competences, and when you manage to unfold this culture and find the right combination, and not forget about risk, think about risks, because this is so much important, and not be afraid of experimenting, trying and letting oneself being more free and liberated, being closer to the philosophy of the startup. Only then this cooperation is possible. Only then there is an understanding of opposition, and when somebody has got new ideas, he or she can get connected, and we will see jointly if what he's got in his mind works or not. And number one. Number two, the startup and fintech issues, most of them start with IT ideas, not with the ideas how to make something better or to find new experience, but they start with an IT idea. That's what's been happening in Ukraine. We've seen a lot of examples, people being creative, producing ideas like chatbots and stuff like that, but they don't pass the hypothesis check if the client needs what they would like to invent. So a startup has got a good, cool idea, and you need to go through a certain evolution, and people should know that they should base their ideas on the needs of the client. And only then they'll be successful.
What we're seeing from this is very much in terms of if you're going to innovate, the push from this has to come from the C-suite, is essentially what you're saying. It has to come from the top level, or things won't be happening within that. And we also have to work out how it's going to work within the regulatory environment, potentially in terms of the creation of a regulatory sandbox, which exists in several other countries. It exists within the UK, it exists in Mexico, Hong Kong, Singapore, where these types of technological innovations can take place in a safe environment for consumers. Now, this actually leads us to the point you mentioned, the issue of the technological development from the fintech point of view and the reaction, how it's very reactionary. What is the actual reality of the bank's ability to use technologies? We hear a lot about different new technologies, whether they be blockchain, AI, et cetera, potentially to be used as part of risk mitigation in terms of enabling more efficient transactions, anti-money laundering investigations, trade surveillance, operational risk issues, anti-fraud, etc. So there is, as I said, there's a lot of talk about this happening potentially, but how far is that from reality within the banking system within Ukraine?
Если позволите, я начну.
If you may, let me start with the negative. You've said blockchain, and blockchain is something that's existed for 10 years now, and looking back since 1905 to 2015, there are no more horses in the streets of London, there are cars. The www was invented in 1819, and in 1990 was created, and by 2000 it was adopted by the entire world, and everybody is now using it. The blockchain was launched in 2008, and as a technology, it hasn't shown a slightest adaptability to the real life. So yet another proof of that. There are 5 people of us here, and we represent different countries, different banks, and we've spoken about agile, we've spoken about customer journey, we've spoken about some other English words. We haven't said the word blockchain up until now. So we've spoken about everything but blockchain.
In terms of banks being able to adapt technologies. Yes, please.
По поводу блокчейна здесь действительно...
Are you talking about blockchain? There are different opinions, and probably there are more critical remarks about blockchain. And if we try and have a look, we see that American and European banks in 2017, during the first 2 quarters, there were 2 quarters when investments into blockchain have dropped. More investments went into infrastructure, into different ecosystems. There are interaction, but not in blockchain. We're talking about blockchain as a panacea that will solve lots of problems. It's not the case. We have to understand that it is just the table, it is just the distributed register. But there are different elements. For example, robotization. Robotization or automatization cannot solve all the problems of the organization. There are certain fields that will be okay, but there are certain fields that will be less efficient. Talking about blockchain, there is only one probably most successful example in the world. It is Maersk company. It is not the bank that every time registers 156 million events in blockchain network. So they talk about different goods, different containers, etc. And this is something that really works globally. If we talk about its implementation in banking field, we talk about certain points regarding trade finance technologies, back guarantees, etc. But we cannot state that currently blockchain technologies have well-proved implementation in bank field. What is definitely working today is artificial intelligence, machine learning, data science. These are the things that is working today, and it allows us to offer clients with individual personalized proposals and offers that will meet their expectations, that will meet their needs at a certain point of time, which is important for the client. This is what is real-time service, but unfortunately it is not working very well in Ukraine, but works pretty well globally. And we try to establish certain competences, because if you want to teach the model, first of all, you are supposed to have some staff, and these people should be competent in order to establish the model, and then you are going to teach that model. That staff will be competent enough to process data. Also, you are supposed to have different connecting systems, CRM, etc., that will be configured in such a way for the model to be operating from the banks to the customers. And currently, more investments go there. as banks, we establish data science islands within the banks, for example, Raiffeisenbank Aval, and we also try to collaborate with the group where sales signals are based on artificial intelligence on the existing models. Also, artificial intelligence is used a lot in cybersecurity field, and we know that antivirus software programs were just in the form of the base that checked whether this virus is present or not. Now artificial intelligence is searching for the viruses itself and is developing protection itself. Also, there are some new programs that are developed that attack the models. This is the point that gets about 60% of new investments, globally.
To comment on that in terms of the role of presumably the growing role of AI in robotics and data analytics, and also if you could within your answer or even your question, because this obviously very much relates to this point of if you're working with all of this and you're trying to create a more specific product for a client, how do you then deal with the issues of authentication, fraud protection, as you mentioned, cybersecurity investment in there? How do you deal with that, and also the role of third-party risks that come into it, please?
Наверное, на две части разобью ответ.
Probably I would like to split my answer into two parts. Talking about cryptocurrencies and blockchain, the Bitcoin price is correlated with the investments into blockchain. It is probably the leading signal about blockchain, and it makes us think that, well, definitely blockchain is present for a long period of time, and so far we have not witnessed our big manifestations of this technology. The idea might be that it is just a hype. So the idea is interesting, but so far we did not observe any huge implementation of this technology, particularly in the banking field. Another part of my answer is about alternative technologies and risks of these technologies. Definitely big data, if we build it in a proper way, if all the algorithms are working properly, it is a huge opportunity and a very good opportunity for the banks. With big data and artificial intelligence, we can reduce the expenditures of the banks. Therefore, banks are trying to invest into these fields because they understand that they will have a measurable measurable advantage and benefit. But what are the risks about digitalization? Currently, on average, people have up to 3 or 5 devices which they carry with them. I'm talking about mobile phones, etc. But in future, what we can expect are big networks of combined devices. And now just imagine the risks when you do not have just 3 devices, but about 100 devices. I have lost my phone recently. I understood that my information is there, all my information is there. And now just imagine that the number of potential points of entry into my personal domains will be about 100. Talking about payment and application of these things in payments, for example, instead of standard payments, we shall have something different, what you already use in Google Pay, etc. And lots of people in Ukraine are already ready for such things. So just we should be ready that there will be geometry in any types of payment, be it based on fingerprint or eye print, etc. This is something which is in store for us. What do you mean by biometry in terms of payments? Every payment should be confirmed in this or that way. Well, we should not wait for this, because when I enter Monobank or Australian bank, I have to present my fingerprint. This is the geometry I was talking about. It is just the point of identification. If you use Apple Pay, you have to scan your face or you have to leave your fingerprint. So practically, I'll confirm that it's me when I enter the bank. Well, people are ready for this. People are willing to have this, and that's what we are going to have in the future.
Look at the experience in other countries of authentication. We have moved beyond passwords. It's even moving beyond one single point of biometric data. And obviously, we've had countries where there aren't very good registries of people, so that we have to find alternative sources for people to be able to access financial services. And perhaps you can discuss that a little bit.
From our side, it's always a temper. So the point that was raised before, things like blockchain, AI, ML, AR, VR, IoT, and there'll be plenty more to come. These are all the technologies. So from our perspective, you're looking at very much saying, okay, one is you need to have an understanding. You need to know how it's relevant. Secondly, you have to be able to translate it into value that the customer will see and have a regard for. And the third is you have to have the ability to adopt it, because otherwise you've got a great idea, but there's nothing you can do with it. And that's when the legacy of bank comes into play, of everything that a bank has with old tech, et cetera, mainframes, you name it. So from that, if you look at us as a bank, we have won world's safest bank 10 times consecutive, but we only won best digital bank twice. So it is possible. At the same time, one is something that the bank is more used to doing, managing risk. And that's the point. The point is, it's not about avoiding risk, but managing it. So even in regards to the payments, we say with some payments, maybe you don't even need biometric. So we have a heavy usage of tap and go, where you simply tap and you move on because the transactions are a certain amount. With wallets, you have a very low level of KYC, just a mobile phone number and an email address up to $999. So it's all about looking at, yes, there is risk, but what is the real risk and what are you trying to manage? And to a certain extent, if you get a handle on data and you find sometimes the fears that we have are not real fears.
Please.
На самом деле, касательно сохранности данных.
Talking about data security, last year we had Peta virus that actually blocked the performance and activities of many banks and generally enterprises in Ukraine. And such banks as our bank, which actually was fine, we didn't suffer from it. It means 50% of IT security and 50% was just luck. The number of new technologies that enter the world of banking are still not tested enough from the viewpoint of their security. So the data security we are talking about is of utmost importance for us, because it is not accidentally that lots of software developers claim that they follow NATO standards in terms of security. And these are not just statements. The number of our technical attacks on bank data, which later might be used for different purposes, is huge. Is huge for some recent years. The operation risks are behind every attack. When this or that technology doesn't work, is of utmost importance for the companies that have their listings in different stock exchanges, and it influences the price of their shares. For instance, the operational risks that appears today in 3 months will have higher effect on capitalization of that company in comparison with the initial period. Definitely, it's good to follow new technologies, but you should be very accurate about it in terms of building up barriers. First of all, we are banks. This is the primary point for us. Probably somebody is working on the principle back for forgiveness, and we probably may implement new technologies irrespective for regulations, but somebody still will follow the way I would like to ask for permission. And the collaboration with the regulator will create the framework for the system. And it's very important for the regulators to listen to the banking system. And the banks are responsible for those millions of clients that trust or give their funds to the bank. And for example, something that we lose, the Apple is not responsible for the information they lost, but the banks are responsible to their clients.
Within Europe under PSD2, and open banking, as it's otherwise known. I don't think it's hit Ukraine yet. Please correct me if I'm wrong. That will obviously have a very significant effect on the relationships between the banks and the regulators, and between the banks and obviously the banks and the fintechs within that space. We only have a short amount of time left, so as we've seen a lot of transformation over the past, I want to say 20 years, 10 years, even 5 years within the banking system. So I want to ask each of you in turn, very quickly, before you move on to questions from the audience, of where do you see the future of banking in Ukraine over the next 5 to 10 years? I'll start off. Who would like to first start? We can start off from the end. Andrei, if you'd like to start off.
Если очень коротко.
To be briefly, I understand we have only just some 1 minute for everybody. I think the banking system will become more open, more transparent, just probably because some of the European regulations will be implemented here in Ukraine. The banks will be more digitalized because this is something that the customers want, and definitely we shall have more collaboration between banks and fintechs, just because these two fields are compatible. So banks will become more open, more collaborating, and more digitalized. It seems to me this is our future. I do agree that we are on the eve of huge transformation of the banking system. I have already mentioned that the banking system becomes a business, and business requires certain advantages of specialization. And in the nearest future, the banks will be divided into universal banks that will have well-established digitalized processes like lean, etc. There will be specialized banks that will have unique competences in some very narrow fields, and there will be banks that will be white-labeled banks. They will perform regulatory functions, and they will be used just for their activities for operations as fintech companies.
I do agree with Sergey partially. Factor number one is the further increase of the specialization. The pendulum is going to go the other direction. It's now going from the maximal universal into the more target-oriented and specialized banks. And I think the loss of relevance, if you may let me say that, the state banks are not going to be less relevant to the real banking business for 4 to 5 years, in case if the economy is going to recover. So these are the two factors to keep in mind. I think that for the 18 to 24 months to come, the majority of the top banks will wrap up the digital pass and operation model definition, so the ones that they're going to be using for sometimes to come. And another thing is that setting up of a greater number of collaborations in between different incubators, hubs, and so on and so forth on one hand, and the banks on the other hand, especially the banks that are quite powerful and they work with the retailers and the retailer networks, thus creating ecosystems. I would forecast as going to be a competitor to the money bank created, because the market now is quite open for that. And there's going to be a considerable change in regulatory demands and requirements, because I don't think it's possible to continue like this, because we cannot even store credit cases digitally. There should be changes. There are certain fixed steps, but we think that everything's got to do with loan, credit, and distance and everything. Lots of things that should be done. And to wrap up, I would like to say that the trend that we are observing is for our country, provided that there's a crisis going on every several years. A lot has already been done, and I would like to express my gratitude for this big team of people in our bank that have made a lot and making me be able to speak about the topic that we are currently discussing. Thank you.
By far in the economy over here, but if it does look anything, or it does become anything similar to what we have at our side, the shape of the bank will be dictated by the customer. That is what will drive what the new bank will look like. And it is all about the rate of change. The banks that can match the change inside the organization to what's outside will survive. The ones that will go faster will thrive, and the ones that will go slower will struggle.
Okay, great. Thank you very much. At this point, I would like to open, we have a few minutes left, to open the floor to questions. We have somebody going around with the microphone, so if you could please, and in terms of your questions, no statements, questions only, please. Why don't we start right over here very quickly, and then we'll move over there.
Well, thank you so much for Mr. Dumra. I live in Shanghai and Singapore. So my question to you is, you know, China has developed ecosystem, but fails to export it. Do you think Singapore somehow could implement a strategy, ecosystem, fintech-wise, export to the world the way China did?
From our perspective, at this stage, if we look at Asia, which is where we are focused in, you've got 60% of the population there, you've got the growth there, you've got two economies of China and India with 1 billion each. We are not looking at exporting anywhere far. So from our perspective, we are very much, we've got plenty to do in our backyard. So that isn't something that keeps us awake as such.
Okay, and right over there, please.
Олег Машков, IT-компания.
Oleg Mashko from IT company. Going back to the Ukrainian reality, which part of the banking transaction operations are currently digitalized and how long will bank branches will exist in Ukraine? So please define digital so that I give you the right answer. Any online operations, something that was not present 10 years ago. I'm talking about with no physical contact with the banking branch, exactly. So payments now digitally are 99% already. And I'm talking about physical entities and then corporate sectors alike. So, and if we're talking about payments, if we're talking about loans and credits, the proportion is lower. With regards of how long will the branches last? This is something that I've spoken. The target and how the branch will look like. So if it's a place where you're going to go and bring the documents like without EDOC flow, they will last for longer. But if you have EDOC flow, then you have the consultation tough products just like Barclays do. So there's a lot of factors that impact on my point of view that a branch will, to a certain extent, will last for a long period of time. But we're talking about specialized branches, and I would also like to add the following. So 5 to 7 years from now, there will be only branches servicing the minimal necessary set of documents, and the 99% of probability, this is what we see from other CIS countries' experience, that used to have the same banking system. We're talking about mortgage here. So the evolution is going to be like this. In order to get the credit card or consumer credit or car credit, you will not have to physically go to the branch with your feet. To get the mortgage, you need to go to the branch. As a result of this, lots of branches located in one city will be merged into one key branch in which there's going to be specialists in corporate crediting, on mortgage crediting, on tough products, difficult products. Everything else will be serviced distantly. So time-wise, 5 to 7 years, I would say. It may last longer, then I'll be amazed. 5 to 7 years from now, I would say.
The interesting point on branches, the EIU actually did a study on this. And one of the things we found is that branches will not disappear for the fact that people like the human touch. At the end of the day, when they're making big life decisions, they want to have someone to either they can hold responsible to a certain extent, or that can help answer their questions in a way that they may not get from a chat bot or through AI. So essentially what we're seeing is the transformation of the branch as a touch point for further selling for banks into particular product lines, potentially. But yes, Andrei, you had a comment on that as well.
Я бы согласился с коллегами, что...
I would agree with the colleagues that in the near future the branches will stay there. The roles will change. Probably these are going to be tough, difficult products, multi-layer products. But imagine beyond 5 to 7 years, imagine the substitution of human labor with more robot labor. But at the same time, probably prime services will stay there. The prime service will remain prime service, and in this regard, probably interaction between two people will be an element of prime service. Why not? we'll see.
Are there any other questions? Yes, in the back there, please.
Владимир Клименко, группа ИСТА. Если можно, два коротких вопроса.
I got two questions. I'd like to ask Sergey Budkin a question. You've spoken about how the relations between consumers has changed with regards to the Ukrainian banks. Where the drivers used to be the branches, corporate database, credit portfolios. What is your perception as of now, and for the 2 to 3 years to go? What will happen to them in Ukraine and in the world? And the second question, I would like to address it to Sergey Chernenko. Suppose that as of now there's quite a successful fintech in Ukraine, and you're aware that it's now providing services that you're interested in as a bank. Would you as a head of the bank try to invest into development of the similar service within the bank, or would you try to buy the startup offering this type of service that you're interested in? Can I answer Sergey? For Sergey, in his presentation he said that PUM has signed the Horizoid system, which is the answer to your question. So a Ukrainian fintech which provides banking solution probably that you cannot buy elsewhere. So frankly speaking, we are willing to pursue both paths, because willingness to cooperate should be one of the key factors of success. This is the organization that will make an easy entrance into the cooperation from legal and technological and mental point of view. Everybody will win. But are we willing to invest? Yes, we're willing to invest. We invest a lot. And if we see that there is a competence or solution that the startup is offering, we're ready to support. To answer your first question, I would like to clarify. The most important for me has been what you find more preferential. So you already invest in, which is best for you, which is simpler for you to invest into your internal resources, or to stream the same money to buy something that's already been produced by a startup. We made our choice. Now we invest into ourselves. We invest into the changes of the company. We invest into spreading of the new skills, new culture, and new technologies, because we think that this is a precondition for a company to become a technology one and be successful. Cooperating with external startup companies. To answer you, the investment attractiveness of Ukrainian banks will depend on the bank's ability to show the business model that is capable of generating income for the ex-shareholders, something that I've been telling you. So de facto infrastructure was sold in 2005, and everybody was thinking the same. We have cheap money in Austria, France, Italy, you name, lots of countries, and we can give them as loans in Ukraine expensively, but in order to give to anyone, we need to go to the town of Kolomyia, and we need to open as many branches as possible on the main street of the small town of Kolomyia in western Ukraine. But when we are able to provide with the fintech innovation, with the distance selling channels, and to show to the external investor that with the help of this you can secure a long-term and high income return on investment, then we will become interesting, attractive from the investment point of view. I am sorry, but this is not this is a case now.
Just from my perspective, and this is personal, my personal advice is banks should not buy fintechs or startups. Let them be.
Okay, I'm afraid we don't have any more time for questions. I'm so sorry, but hopefully we can catch up people over lunch. I'd like to thank all the panelists for what has been a really interesting conversation. What is very clear is that digitalization, as we know, has already happened. We're going to see changes within banking infrastructure itself. how it's being, through the branch network, how the branch network will develop or be cut down, as the case may be, as we become more automated. And in terms of that relationships between banks and fintechs, it's going to be critical whether they choose to partner, to innovate internally, or to buy out. So things will adapt very quickly within Ukraine, I think, over the next few years on that, as well as the relationship with the regulators within that process. So I'd have to say, leave it at that of, you have to really watch that space, and I think there has to be a conversation between the banks and the regulators within that. So again, I would like to take this opportunity to thank all the panelists, and I hope you enjoyed it. Thank you.